Alright guys, and welcome back. So in today's video, I want to discuss why you shouldn't be buying coins, or for that matter, even stocks, just because they're cheap. Listen, I get this so many times where people will tell me, hey Felix, I know you're telling me that, I should be buying Bitcoin, but Bitcoin is so expensive, I literally can't afford a Bitcoin. Instead, I found this other coin, like for example, Bitcoin Cash. Sounds like it's also Bitcoin, but it's cheaper, so I'm gonna buy that instead. Or my all-time favorite, I'm gonna buy Ripple because it's 20 cents, 30 cents. And what if one day it's as big as Bitcoin, $10,000, I'll make a 30,000x return. Okay, we gotta have a talk. So first of all, in finance, if you do not understand market cap, you need to stop investing and trading right now. And the good news is we're gonna go over that right now. We're gonna explain you how market cap works. Because one of the biggest mistakes that beginning investors and beginning traders make is that they evaluate their investments and their trades based on the price of the coin or the stock. That's one of the biggest rookie mistakes you can make, because ultimately, in order to compare, apples to apples, we have to look at the entire market size of an asset, and the only way to do that properly is to look at market cap. Okay, so what is market cap, or long market capitalization? To put it simply, market capitalization is the price an asset is trading at, right? So price, the ticker tape that you look at on your charts, times multiplied by the supply. How many coins are there? Right? So what that gives us is that we see the entire market size, meaning if we stack all the coins out there together, if we stack all the stocks out there together, how much is the entire market worth? Because now we have a much more fair comparison, because imagine you have a Lamborghini, right? And I think Lamborghini only makes about 1,000 cars a year. Meanwhile, Honda or Toyota, they might make millions of cars a year. Quite naturally, the market size of a Lamborghini is much smaller, which results in the prices of the individual cars being higher, right? Just the same way, if there's a lot of cars from Toyota, Honda, and the price are cheaper, now you have equal market caps that you can compare, right? Because ultimately, it's not just the price that matters, it's also the supply that matters. Now, here's where we go a little bit more nitty-gritty, right? So number one, it's already important that you look at market cap to determine whether something is cheap, more so than looking at price, because a coin, like for example Ripple, can have a 30-cent price, but still have a multi-billion-dollar valuation. Meanwhile, a coin like, let's say for example, Maker might have a token price of hundreds of dollars, but only be worth $500 million in market cap. Okay, so now let's take it one step further, because even within market caps, specifically in the crypto space, there's a lot of confusion because there's two different types of market cap. On the one hand, we have circulating market cap. Okay, what is circulating market cap? That means all the coins that are currently available and unlocked for trading. So in Bitcoin, that means all the tokens that have been mined so far, right? All the Bitcoin that's been mined so far. In other systems, it could include, for example, all the coins that have so far vested for the team, whereas it doesn't include the tokens that haven't yet vested. It doesn't include the tokens that haven't yet been mined. It doesn't include the tokens that haven't yet been given out as an incentive for something like liquidity mining. Right? So the bottom line is we're looking at two different numbers. One, circulating, which only includes the tokens that are currently out there available. And then the other number is what we call a fully diluted market cap. Meaning, when the day is over and all the coins that could be out there have been given out, what is the fully diluted market cap? Okay, so to give you an example, with Bitcoin, for example, let's say that right now, there's only 18.5 million Bitcoin in circulation, right? So to get to circulating market cap, we multiply 18.5 million by the current price of 13,000. Meanwhile, if we want to get the fully diluted market cap, we know that there will only ever be 21 million Bitcoin. So we multiply 21 million Bitcoin times 13,000. So what you'll notice is that generally, the fully diluted market cap ends up being somewhat higher. And this is very, very important for you to understand, because there's some projects, they come out the gate and you might be thinking, wow, this is cheap. It's only got a $5 million market cap. What you don't pay attention to is the fact that perhaps there's still 95% of tokens that are being vested, that's still being held back, which means in reality, the fully diluted market cap would be $100 million. Not so cheap anymore. right? So we saw this example. Both Curve and Filecoin had market caps ranging between the market cap of Ethereum and Bitcoin. We're talking $50 billion to $200 billion. It was nuts. It was madness, right? But all that people were looking at were the circulating market caps. And they said, oh, look, it's still cheap. It's only worth a couple $1 million. So what you have to understand is that historically, fully diluted market caps always matter and come true, because ultimately, fully diluted market cap simply means that more coins, more shares will be given out over time, which means there's a high likelihood that that added supply might ultimately cause selling pressure, right? Because think about what happens. If 95% of the supply still isn't out there, which means that that might, let's say, go into the hands of the team. What if the team dumps on you? What if those advisors that were early enough, they want to take some profit? What if some early investors want to take profit? What if the miners want to take profit? So to decrease your risk, you have to make sure that, number one, the circulating supply isn't too far apart from the fully diluted supply. And you have to make sure that the fully diluted supply is still fairly priced, right? So I only look at fully diluted market caps because ultimately the circulating market cap, it changes every day. You want to look at a number that is fixed. Okay. And the cool thing is, in case that some protocols, like for example, Kyber Network, they have burn mechanisms. So their fully diluted market cap actually keeps going lower and lower and lower because with every single day, every single month, every single quarter, more coins are getting removed from the total full supply. So it's very, very important that you understand these three concepts, right? Number one, price itself is meaningless. Price itself is meaningless because just because a coin or stock costs cents means nothing about where it is going next, okay? Instead, it's important that you look at market cap, because market cap now allows you to compare apples to apples, because now you're looking at simply the market sizes. Perhaps you say, well, this decentralized exchange protocol is worth 300 million, fully diluted. And this decentralized exchange protocol with similar stats is worth 100 million fully diluted. Now you could say that the last one is technically undervalued compared to the other one. But the price doesn't matter because one could be trading at $1,000 coin, the other one could be trading at 10 cents a coin. It literally doesn't matter because there could be way more tokens. In fact, some teams literally do that to trick investors. I've seen this happen before where they do 100-to-1 split, right? Perhaps their coin was trading at $10 and then they do 100-to-1 split and all of a sudden the coin is only worth 10 cents. But you get 100 times as many coins as you had before. Now all of a sudden, newbie investors out there think, wow, this one's cheap, it's a deal, let me get a lot of it. I've heard this so many times that people say, I get a better bang for my buck. But that is one of the silliest things you could do because ultimately that's just not how finance works. So understand, price does not reflect where price is going to next. It doesn't communicate anything about being cheap, expensive, fairly priced, overvalued, undervalued. Market cap is more relevant, and when you look at market cap, the most honest type of market cap is fully diluted market cap because it includes all the warning signs about whether or not there will be, a wave of added supply in the coming years. So guys, I hope you found this video valuable. As always, go to places like CoinGecko or CoinMarketCap to check the fully diluted supply. That's where you can find it very easily with one click, okay? And if you want to learn more about the world of DeFi, decentralization, crypto, make sure to check out cryptocademy.us/DeFi, where we created an entire mini course for free, no strings attached, no card, no nothing, where you can learn all about why DeFi matters, how it is being valued, who the players are, and just get a deeper understanding of the space overall. So guys, if you want that, check it out, link in the bio. And with that, I hope to see you next time. And as always, don't forget to like and subscribe. I'll see you then.